Do you want to save 23.8% in taxes? Do you want to save any percent on taxes? Do you want to not have to pay everything to the IRS? So Sally Gimon has saved over $36,000 in capital gains. And I think that that's actually a lot more than that, since she wrote me that little note. And she's going to help us to do the same thing. Sally, tell us a little bit about your start in real estate, because you didn't start off as real estate agent, right?
No,
I mean, as a real estate investor, sorry. Real estate investor.
I'm actually an insurance agent. Have my license for 19 years. I still do that. First time I got involved in real estate was in 2007, lost my shirt, when the whole market crashed. I then joined a real estate group where we have weekly, daily calls, things like this. And I started investing in February 2019. I was doing notes, and when COVID happened, all the courts shut down. I had a note that hadn't paid me in 9 months. We were 17 hours away. It was in Tennessee, so it was a forfeiture. But we got shut down. They lived for 27 months without paying anything. And my mom, who hates anything to do with foreclosure, she's like, get them out of that house, 27 months. So while this was going on with COVID, I did buy a bank-owned property for $20,000. And in the contract with the bank, it had to go to auction for at least $50,000. That's how they're going to write it off on their paperwork. I'm curious. I started researching things, finding things out, and I did find the specialized Spendthrift Trust that does defer capital gains. Capital gains right now is 23.8% on any profit. One of my clients has an autistic child. She homeschools him, and she buys furniture, strips it, and then does consignments. The IRS did an audit on her in 2020 for less than $2,000 because they said that she had money coming through. I'm not anti-government, she is, but people have to think about this, because the IRS said $2,000, you've got to pay the 23.8% against it, and she's just trying to make extra money for her family. So with this trust, there's 5 special things for it, because 95% of the trusts out there, if you listen to Susie Orman on PBS, she talks about, hey, we'll set up a trust for you for $1,000. My parents had the same trust just to avoid probate. When they pass away, the trust ends. It does not save your taxes. It does not save you from being sued on any of the property you have in that. So this trust, the 5 big things, it's number 1 is a non-grantor. So somebody else sets it up for you and then steps away. So I used a family friend. He knew me before I was born. He was 84 at the time. I don't know if Black Bear restaurants are national, but it's like a Denny's. We met for lunch. He was on one side of the table. My roommate and I were on the other side. She witnessed it. It's 17 pages, so like 16 signatures. And
oh my God.
Because it's got to be legal. But I bought them lunch. We had a good time talking. And so then he's a grantor. He steps away. I'm the trustee. If you all know the book, Garrett Gunderson wrote a book about what the Rockefellers do. Have you ever heard of that book?
I haven't. I got to read that one.
I can give you a PDF copy for it, but he had to change the name. It's now What the Billionaires Do, but it's based on the Rockefellers' concept of the office. It's a 5th generation, and every single Rockefeller, there's almost 400 of them now, all are in the trust being carried with it. So it's non-grantor. It's complex, which means I can use real estate. It can own my car. It can own money, go back and forth. Third thing is it's irrevocable. Again, my parents and what Susie Orman talks about, it was just for them for us to avoid probate. After that, it's done away with. Irrevocable means it goes from generation to generation to generation. The law firm who I sell the trust on their behalf has Rose and Rose Law Firm, has a trust that's over 390 years old. I mean, it's been going on for this long. The trust, for those history buffs, it's based on King Henry VIII. When he started the Church of England, he started taxing all the lords and ladies, and this is how they got told King Henry VIII they couldn't take the trust. So we got non-grantor, complex. Let me just make sure I get the words in order for you. Sorry for this. Discretionary. This is a little bit important too. The trustee can make their own rules. I have a husband and wife in California. They have 5 apartment buildings. Their only daughter, unfortunately, is involved in drugs and alcohol. They're raising their grandson. They have made a requirement. They pay for her housing and they will give her food. But if she wants anything else, she has to take 4 random drug tests a month. Well, she went to go sue them, saying they can't do this. And how this trust is set up, they can do whatever they want. If they decide when they pass away, if they're going to just avoid, she gets nothing of the trust and send it to their grandson, they have complete control of it. Again, back to my parents' trust they set up. I have 2 brothers. Everything was divided equally between the 3 of us. So again, discretionary. The trustee makes those decisions. And then the number 4 one, we've got irrevocable, complex, discretionary, non-grantor, and then spendthrift. This is a very specialized thing that the Supreme Court has decided on 3 times. A spendthrift trust is its own entity. So when you have an LLC or you have an S Corp or you have a limited partnership, that's done through the state and it's judicial. A spendthrift trust is contractual law and it's with the Supreme Court. So this is how you defer the capital gains or you never have to pay the capital gains. So I just found out yesterday, I'm not trying to crow, but I put up the money for fix and flip in Ottawa, Kansas. We're selling it on Friday and I'm going to be making $79,000 in profit on that house.
Nice.
I'm very excited, but just to give you an idea, 23.8% of $79,000 is over $18,800 that I'm saving because I'm in the trust. Kind of a scary scenario. I'm not there yet, but in December of 2021, Congress has passed that on some tax levels, $400,000 and higher, they can raise the capital gains to 40%. So if you're a smart investor, you're giving 40% away to the federal government. I'm not anti-government, but I can spend my money better than the government can do it. I just drove up to Boston. You were saying you're in Boston, Massachusetts. I went on the New Jersey Turnpike. There were potholes on the New Jersey Turnpike bigger than my car. I mean, what's the government doing with your money? So again, with this trust, just so people understand, we have somebody who sets up the EIN number, gets the grantor, make sure everything goes well. We have people helping you transition your belongings into the trust. Like my car did not go into the trust until I sold the house. Why I got the trust originally. I bought a house for $20,000, put it on auction for $50,000, and it sold for $64,000. That $44,000 in profit is over $10,000 in capital gains. So, I mean, it just keeps adding up. That was 2021, and now I'm in 2022. I've wholesaled 3 houses, and I've now just got paid off on another house. The trust has paid for itself in under 12 months. And we have people helping you, and then we have a retainer for CPA. It's the middle of July. I don't know when this is going to go live for you, but you're not going to do your taxes until April, maybe even October of 2023. The CPAs will sit down, work with you, make sure you know what's going on. And then if you have your personal CPA you like, they'll train your personal CPA so you can continue working with them, because it is a big change. It's not a big change, but you've got to work within the rules. Yeah. If you have minor children, everything for the minor children up until 18, or unless they're a full-time college student, everything is paid for. I'm the trustee for my trust. The 3 things it does not cover are food, fun, and fashion. I was just up in Boston for a meeting, that paid for my hotel and to get up there. Food, I do take, I put my car in. This house that I'm going to get paid on at the end of the month, I have that in the trust. I can do what's called a draft letter from the trust. My car was paid off, but it's worth, let's say, $12,000. I can do a draw against the car, and that's all tax-free. But everything else is paid for. I just got registration on my car for North Carolina. I just had to get my windshield replaced because I had little dings in the windshield. The trust paid for the registration, paid for the windshield. It pays for almost anything. I have an infinite banking policy in the trust. It pays for that. It pays for my health insurance. One of my clients has a trust, and his father, unfortunately, he's in, now he's in hospice, but he's got cancer. The cancer drugs were so expensive. The father is a beneficiary and the trust is paying for his cancer drugs. Unfortunately, he couldn't afford the drugs on his own. So it helps people save money. It helps people 100% judgment proof. A good friend of mine, Brandon, at the time had 7 different short-term rentals. Memorial Day weekend, not the woman who rented it, but her mother tripped and broke her wrist. I don't know how she got Brandon's phone number, but she texted him and said, "I'm going to sue you for everything you have." Brandon's calling me going, "What's going on?" I'm like, he was up in Grand Rapids doing a fix and flip. And I'm like, "Do you have your trust booklet with you?" And he goes, "I always carry it." He just took a picture of the front page, sent it to her attorney, and they couldn't do anything. So completely judgment proof, and then completely private. When I had my LLC, I had people sending me, "Hey, let me finance this house for you," because you go to the Corporation Commission and you look up the LLC, you know who it is. When someone tries to look up for the trust, they just know it's a law firm that has it. They don't know that I currently have 2 short-term rentals, and I am doing it. I did my first arbitrage 2 months ago. Nobody can come after me for this. I have one client who has 100 doors in Chicago, and he loves it because, someone slips on ice and they want to sue him. He's got the liability on the house that he has, but the 99 other houses are all safe from anything else that happens to them. So I'm sorry, I'm talking too much. What questions do you have for me?
No, it's good. So just one thing that came up because of something you said earlier. So what would be the cost for something like this? Does it depend at all on what's going in it, or is it just a one-time flat?
It's a one-time fee. There's 2 different trusts. One is a business trust, which is for 1099 employees. And then the Spendthrift Trust is for any investment. I don't care if it's crypto, stock market. One of my friends does options tradings. Individual trust at the one expense is $18,500. If you get both together, there is a deal on that. It's only $26,000. It's a one-time fee. You're going to have your CPAs working with you now, but when you go to file your taxes, I just did my 2021 taxes. I filed them July 1st. It cost me $600 to do my taxes. I shut down 4 different LLCs, where you do K1s. In 2019, my K1s were $150 a piece times 4. So I saved that money. So I'm almost breaking even. So again, the one-time cost, and it goes from generation to generation. You will have Rose and Rose Law Firm on your behalf if you have a legal situation. Knocking on wood, I haven't had any legal situation yet, but I would have to pay a retainer for Rose and Rose to work with me. But I have several clients in California. They pay $600 a year per LLC. That does away with all of them. So you can close down your LLCs, your S Corp, things like that. One of my clients shut down 14 LLCs, but kept his S Corp because it does have business credit on it. I'm building business credit on my trust right now. But it's individual decisions to how you'd like to work with it. And we're here, it's not just a one-time fee and you never talk to me again. It's a one-time fee, but we're here to work with you as you grow farther and grow bigger and bigger. Because as I had told you earlier, the Rose and Rose Law Firm has a trust that's over 300 years old. They're still working with that family. So different things come up. Right now, I just added, I have an infinite banking policy on my niece for my grandniece to go to college. We put that into the trust, and they had to get, we had to make Gianna, who's not even 2 years old yet, we made her a beneficiary, had to get her social security number and things like that. So she's now a beneficiary. She becomes whatever she becomes in 30 years from now, she's going to be covered by the trust. If she wants to be a mechanic, if she wants to be an opera star, it's her choice, but she now has protection from generation to generation.
So as you add assets into the trust, or as, like if she becomes a mechanic and decides to buy her own garage and decides to do all these other things, they automatically can be put into the trust without any additional,
depending for real estate, it goes into the Spendthrift Trust. For a garage, that's business income, that would be the business trust. My brother, he has a brewery. He's a beneficiary of the beneficial trust. It owns all the equipment, and then the business trust leases it out. So he's saving thousands of dollars in 2020, 21, and now for 2022. So correct. And again, individual questions. Authors, that's another thing. Anyone who has, I have a gentleman who has inherited his grandfather's farm in Oklahoma, oil wells. Anything that you're getting royalties on goes through the Spendthrift Trust. Some coaches and speakers, because they're selling intellectual money, can go through the Spendthrift Trust. But individual questions, we will set up a meeting, talk to you, let you know, how it's working. Because I am not an attorney, I am not a CPA, but I want to teach people this because I was telling you a story. A good friend of mine, Kelly, he and his wife are trying to save money for retirement. Back in March of 2021, they were able to help a woman made $50,000 on wholesaling a house in Buckeye, Arizona. He just did his taxes. He's shocked. He's got to pay $900 a month for the next 12 months to the IRS to pay for his capital gains. And he's just like, I have to take out a second job. He's working. He was retired. He's now Ubering 6 days a week to pay his IRS bill. And he's just like, no one told, and he had been coming to my seminars and he's like, I didn't think it was going to be that much. I'm like, oh, Kelly, I need to help you. And just to know what's happening, because so many people are doing a side hustle. A friend of mine who, Modere, I don't know if you've ever heard of that. It's shakes and potions. Her clients, she's got over 200 clients, are in the business trust. Then she's got 2 columns going down that she makes commission off of. That's in the Spendthrift Trust. So she has both working for her. And, again, it sounds expensive, but just this one real estate deal, I put up $30,000 and we're selling it for so much more. I mean, I'm happy. I'm excited making $79,000, pure profit. But to know that there's an $18,000 charge that I'll have to pay for that later, that's a lot of money to figure out when I'm going on vacation in August. That money's going to be spent. So yes, so that's why I want people to understand this. I don't care for the Spendthrift, any investing, be it crypto, be it options, stock market. For a business trust, I just help a gentleman. Do you know Schwann's home delivery, the yellow trucks with frozen food?
No.
He's got 4 routes that he's selling to his sons and his nephews. Not $80,000 per route to each one of his children. We are saving him over $70,000 in capital gains, because the federal government would say, you're selling these routes, you're making this kind of money. So I'm working with business brokers, because he had no clue he'd be paying that much money for selling routes to his children. He's just like, what if I give that to my children? And the business broker's like, we can't do that now that we start the paperwork. So again, just letting people understand what's happening and giving them a solution. Maybe it's not for you now. Maybe it's not for you 2 months, but maybe in 2 years when anything you're making on real estate. I don't care if you have a short-term rental, a long-term rental. I wholesale. I just did. I was the bank on a property where I just made the investment. I just talked to people in the syndication for apartment buildings, all the rent rolls in the apartment buildings. If you're in a REIT, a real estate investment index trust, or a REIT, again, my friends who have the syndication, they're selling a building in September. We just had a meeting and said, hey, you can get paid normally like you do, or you can start the trust, and then this is how much you'll save. The lowest investment in that apartment building was $100,000, and they're making more than almost 3 times the amount of money back. So there's a lot of capital gains involved for that one apartment building.
Wow. Yeah, definitely. So it sounds like it might be complicated in the beginning to set up. And I'm also thinking about that, you said you might not need it for a few years, but then if you don't set it up now, each year you're paying taxes that could be paying towards the trust. So it's kind of a catch-22. You want to really think it through and what your financial real estate investment future is going to be. But when you're just starting out and you're setting it up, I mean, how do you help people decide what should go in the trust and how the whole thing could work and what's the best choice for them?
Well, like for myself, I bought the bank-owned property. I bought in July of 2020. I didn't sell until August, late August of 2021. At the time, it was in my LLC, so it was very simple. I just did 2 bills of sales. Let's say we started the trust in February, so let's say it was February 1st, 2000. This apartment, the building was 1101 Haywood Avenue in Rocky Mount, North Carolina. My LLC sells it to Sally Gimon for $1, get it signed. Then the second bill of sale said on February 1st, 11101 Hayden Avenue, Rocky Mount, North Carolina, is being sold from Sally Gimon to the trust for $1. I just got them notarized. At the time I was living in Arizona. Now I'm in North Carolina, so it's a little confusing, but I sent both bills of sales to the attorney, and then I sent the first page of the trust, and they just had changed the paperwork over, and it was in the trust. Now, if you own your own home, it's the same situation, 2 bills of sales, but you're only going to register the first bill of sale, because if you want to get a HELOC, if you want to get solar on your home, when you plan to sell your home, depending on where you are, in Arizona, we do it through title agencies. Here in North Carolina, it's through an attorney. When you go to sell your home, then you file the second bill of sale before you put the home on the market. So it's halfway legal and half in the trust, half not in the trust, because we want to make sure you can get the equity out of your home very easily. But now I just purchased 2 tax liens in Florida. I just used the trust. They needed a W-9. I have an EIN number for the trust. My goal is to do investing in Florida. If y'all don't know this, tax deeds in Florida are 18%. I'm buying, I just stopped buying 2015. I'm doing 2016 tax deeds and paying for everybody above, and then taking it to auction. And, not a huge amount of money, but I'm putting $6,000 in. I'm making another $6,000 to $7,000 out of it. It's a nice little money. It's taking about 3 months per tax deed, but that starts adding up. $6,000. Let me do my math real fast. Times 0.238. So for one tax deed, $6,000 would be $1,428 in capital gains. We're at the end of July, I would have done 4 of these. So times 4. Again, I'm not trying to crow. I'm just trying to tell you how I'm doing this. That's savings of over $5,000, $5,712 I have saved from my sitting in my armchair doing taxis. I will not rehab a house. You don't want me rehabbing a house.
No, but we're intending to talk about trust, but it's great that you're bringing up some of these other ways that people can make money with real estate without actually wielding a hammer or talking to tenants or anything like that, right?
I'm all about simple, but yes.
Yeah, exactly. Yeah, simple. And it's not 100% passive. You have a few things to do, but it's much more passive, I think, than other forms of real estate investing.
To me, going to Home Depot is a foreign country. I walk in, I'm like, where am I supposed to go? So, if now that I'm making some money and I'm being the bank for other real estate investors, instead of going and getting hard money or anything else, I had put this money up for a friend of somebody I know in my real estate group to be able to, fix and flip the house. He too is making $79,000 profit. Guess what he's buying? As soon as we get paid, he's buying the trust, because he's going to have to pay that amount. You take all what you purchased the house for and all the charges and everything else, but there's still profit to be made. And it's kind of scary. The federal government's hiring over 19,000 more IRS agents to go after people. I don't want to be one of those people.
Right.
The Spendthrift Trust, again, I'm doing it through a law firm. They will protect you on this. Only once there was somebody who was going to be audited, and they met at the law firm. They brought out their trust book, and they're like, "Oh, we're done." That 2 minutes for the lawyer was all they had to pay for, if that makes sense. So.
Yeah. So I think you said this before, but you can also put your primary residence in there, anything Correct. That you own, right?
Correct. It's going to pay for everything. So your water heater goes out. It'll pay for your electric bill. It will pay for the water bill. The only reason you're not going to file the second bill of sale in case you want to get the HELOC, or if there's something to do with that. But it's someone who's renting out a room. I have a client who has what they call ranch style house. She and her husband live in the house, and then they're renting out the rooms to senior citizens. They're making $600 per senior citizen in 5 rooms. Then I'm going to do my math again.
Yeah, 3,000
times 5. Sorry for the phone in the background. So, per month, for what they're making on their ranch home, it's $714 that they pay in capital gains. So when you do that for the full year times 12, that's over $8,568 they're saving on doing that. They also have 2 other ranch style homes that they have people renting out doing that. And, it's great business. They're finding these houses, and people who can't live on their own, they have, someone's cooking for them. I don't know if it's a path I want to do in real estate, but it's something an idea in my head right now to do this. So.
Yeah, I actually talked to somebody a while ago, Marcia Miller, if you want to, if you're listening and you want to go back to that episode, because Marcia does exactly that. She's opened up her home to, she actually loves working with people with dementia. So she's opened her home to people with dementia, and, they just have a really fun time. And she's making a ton of money. So.
I don't know if you're involved in a RIA group. I just joined it's Carolina RIA. I had met them there, and she's just like, I need to talk to you. And if you met them, they're the nicest couple in the world. And they're like, we just fell into this because our neighbor was selling their house, and we did. I'm not great on this, but they did owner financing with the neighbor. So they've got 2 houses, these ranch houses with big backyards, and they have a barbecue, every few weeks, and they're making good money. So
yeah. It's a very interesting, especially if you have the right, obviously you have to have the right personality for it. Although, she's starting up a second house that she's not going to live in and not going to really have much to do with. So, if you understand administration and how you can make people feel cared for and loved, and, they can have a fun time, and, how to hire the right people, then it's a very interesting and very, I think, a great route for people who, the people who are staying there, right? It's just more one-on-one attention and things like that. So.
Exactly. It's kind of funny. When I came to North Carolina, I'm doing, it's a crazy North Carolina rule, but it's upset bids. You go to an auction and win a house for $10,000. You think you've won? Oh, no. In North Carolina, depending on there are 101 counties, there's either 10 business days or 10 calendar days. I can walk in and put $10,750 down, and the clock starts all over again. It's absolutely, I fell into this because of my house in Rocky Mount, North Carolina, and my brother and sister-in-law have a 5-bedroom house. Their kids are grown and everything else, and they're just like, I came here and it's beautiful because I was living on my own, and I'm like, it's nice to talk to someone, nice to have dinner with someone. So yes, it's really, and my brother's like, what are you doing? And I'm like, let me show you. So.
Awesome. So Sally, I love what you shared. I hope we've got at least people thinking about what they could possibly do. So first question, as we're sort of wrapping up, is what should I have asked you that I didn't ask you? Like, what's one thing you're like burning to tell me that, they'll tell everybody?
The main question I get, and people say this is illegal. It is not illegal. There's a law firm behind it. The trust is from way back in England. It really does work. If people have questions about it, I'd love to talk to them. I do have a contact for them to sit down, and I suggest, hey, get a notebook out, write down your questions so you can get your answers, because there's so much misinformation out there. I want them to know I'm not lying to them. I can show you my tax returns, but 2001 has several properties on it. So far, what I'm doing now, it's paid for itself in 1 year. And this year I'm saving even more doing that.
Excellent. Okay. So then the second question, Sally, how can people get in touch with you if they want to understand this on a deeper level and, get some advice from you?
Correct. My website is thetrustisyou.com. Email is info@thetrustisyou.com. My name is unusual, Sally Gimon. I'm on LinkedIn. I'm on Facebook. God help me. I just got on TikTok. TikTok. For TikTok, it's Spendthrift Trust. It's amazing how many people are on TikTok reaching out about it, because I guess people are just filing their taxes in the middle of July going, I didn't know this. My crypto, I have more crypto trust people than I do real estate people, because I guess crypto really got hammered for what happened in 2021. So
yeah, definitely. All right, great. And all those links are going to be in the show notes, so you don't have to try to remember how to spell Sally's name. You can just, which is very easy. Gimon, very easy.
Correct. And also I will put the PDF for my 7 streams. I mean, when COVID happened and my notes, 3 of my notes that were paying me every month stopped paying me because, hey, we don't have to. I had to find other streams of income. I'm not telling people to do this, but if it helps them, great. If they have something else to do.
Absolutely. Absolutely. So that, you can, when you go to Sally's website, you'll find her PDF download, 7 streams of income. And she's got another book on her other link that we're going to put up there for you. So yeah, definitely reach out to Sally, because if you're thinking that you want to make money that you don't want to have to pay taxes on, is there anybody like that? Then you need to talk to Sally. Awesome.
Yes. Thank you, Christine. I appreciate you taking the time with me. I appreciate that.
Oh, Sally, it's been my pleasure. Believe me, you've really illuminated and taught me a lot of things that I didn't know before. So those are the kind of things you want to know, is how to save money. Not that we don't love the government, but
we're lucky to live in the United States, but there's just a little bit too much going on right now. So unfortunately,
if they're not going to ask me how I want them to spend my money, then I'm sorry. We're just going to have to we're going to have a conversation.
Yes.